Hi everyone, I am Adarsh Jha. Stock markets recently plunged. What caused it? The yen carry trade. And in today's short video, we will discuss about what it is and how it has impacted the financial market worldwide. First off, what's a carry trade? When you borrow money cheaply in one country and invest it where you can earn more, preferably in bonds or equities of other countries. A yen carry trade is when you borrow cheap yen, convert it into other currencies, invest it for the higher returns, and then convert back to yen. If the yen weakens, you make even more profit. It is only possible because Japan has a long history of low interest rates. In fact, it has maintained its zero interest rate policy for nearly 2 decades. But there is a risky side of it. If yen gets stronger, you are in trouble. Let's say yen goes from 120 to 100 per dollar. You could end up owing more than what you earned, wiping out your entire profit. This is exactly what happened in August 2024 global market crash, when Japan hiked interest rates. Consequently, the yen surged and the dollar weakened. This made borrowing yen super expensive. Investors panicked, selling everything to pay back their yen loans. This massive selling caused a domino effect, crashing stock markets worldwide, including India as well as Asia. Let's look at the impact of yen carry trade on the Indian equities. There are some possibilities that some carry trades would have happened involving the Indian equities, which have been the top performing market worldwide in the recent years. Indian companies having unhedged borrowing in yen would have worried due to the such sharp up move in the yen currency. The yen carry trade is indeed a risky gamble. The recent crash is a harsh reminder that the financial world can change in a blink. That's all from this video on the yen carry trade. If you like this video, please like and share and subscribe to the channel. Thank you.